In September 2024, foreign inflow into the Nigerian Exchange Limited plummeted to its lowest in the year, now reaching about 11.26 billion naira. This decline, highlighted in the latest domestic and foreign portfolio investment report from the NGX, reflects a broader trend of weakening foreign investment as investors increasingly liquidated their holdings. Despite a total foreign inflow of about 310.99 billion naira in the first 9 months of 2024, significantly higher than the 108.93 billion naira recorded in 2023. The situation has worsened, with foreign outflows also rising. This morning, Muhammadu Saidu, Senior Research Analyst at TrustBanc Capital Management Limited, joins me to help us understand what the issues are looking at Nigerian equities. Good morning to you, Muhammadu.
Good morning, Lekon. So,
now,
in terms of decline,
okay, so I would, Muhammad, I'm going to pivot the conversation so that we're able to make informed conversation and decisions as regards how we want to channel this discussion. Now, Muhammadu, investors seemed optimistic at the beginning of this year when we tracked the activities, pushing over 310 billion naira into the Nigerian bourse. So, what factors contributed to the decline in foreign inflow, and why did that finance flow wane towards the end of the year?
So, in terms of the decline in the exchange for September, it can be attributed to a lot of factors. So the major factors are problems that have been in Nigeria for a while, which is the exchange rate instability and the high interest rate environment. So for context, if you look at from February, where the naira depreciated to around the 1,900 levels, but we saw it bounce back to around 1,005 for even below 1,100 levels as of April to May. So ever since then, we've seen the naira steady decline to the levels we have right now, which is 1,600, 1,700 levels. And also, if you look at the data, it also coincides with where the foreign inflows peaked. Because if you look at foreign inflow into the exchange, it peaked around May. And ever since then, there will also be a steady decline. So it's not coincidence we are seeing this correlation in both data. In terms of the overall market performance, we reduce liquidity, obviously, but which will lead to heavy reliance on domestic investors, which will now account for even over 90% of the market transactions as we speak.
Yeah, so you actually cited, forex disparities, and foreign investors increased the amount of liquidated investments between August and September. So when you look at the challenges that you mentioned, was that the peak where the exchange experienced a bearish run? That's between August and September.
No, not necessarily. It's just more of investors' confidence in the naira. We've also seen our issue with inflation, where around August, inflation, we saw declines in inflation, but in terms of core inflation, we also had it has not really declined. So when this inflation figures start coming out, and we're seeing that we're now out of the blue yet in terms of inflation, foreign investors are seeing this and are saying, inflation is still rising in Nigeria, which can discourage foreign investors.
Okay, so let's do a bit of comparison now. So when you compare the performance of domestic and foreign transactions on the NGX between September 2023 last year and this year, September, what trends or patterns did you notice looking at the time frame?
Well, in terms of time frame, since September last year to September now, transactions have more than doubled. But these numbers can be inflated because we also have to consider the exchange rate as well. Because if you're looking at it in terms of naira terms, you might look at it, there's a lot more volume in the Nigerian exchange. Because if you also have, when you consider our exchange rates, people bringing in money at 700, 800 levels, comparing that to people bringing in money at 1,600, 700 levels, it's two different things. So somebody bringing in $10,000 at 700, 800 levels, and somebody bringing in $10,000 at the current levels now is two different ball games. So in terms of naira value, it looks like it is very much a big difference. But if you actually look closer at the data, you see that there's been an increase, but it's not as steep that we see.
So if you now begin to, experience volatility in the exchange rates between now and probably September 2025, and investors continue to abandon the equity market to search for better yields, how do you think the overall market performance will be by September 2025? What are your predictions?
Well, in terms of prediction, it's hard to say because the Nigerian exchange is very unpredictable. Like we saw what happened in January, where for some reason domestic investors just came into the market and they were pouring into stocks like the bullish rally. The exchange even gained over 30% in just January. But ever since then, we've seen bearish, like there's been like a tug of war. But in terms of predictions towards 2025, going into September 2025, I don't think there's a big concern in terms of foreign investors. We always have foreign investors, but domestic investors right now are what's driving the market, and I don't think there's any sort of concern for now.
So if you say it's not a big concern that foreign investors are leaving the Nigerian bourse, then of course you would recall that President Bola Tinubu and Vice President Shettima, have undertaken about 41 trips across 26 countries in the last 1 year, gulping several billions of naira to enhance bilateral cooperations and woo investors. And you would even recall that the president rang the Nasdaq stock market closing bell, telling investors that Nigeria is a lucrative ground for investment. So if you say that, okay, foreign investors leaving the Nigerian bourse or leaving the Nigerian economy is not a big deal, then why would the president do that? And judging by that, would it mean that, those kind of engagements were futile efforts, so to speak?
No, I would say it's not a big deal. Obviously, it's a big deal, but I don't think we're in a point of, I would say, a crisis. We still have foreign participation in the exchange, but it's not just as much as it is. If the economy stabilizes, we still see foreign investors come back. Because if you want to compare us to like other markets like America, where you are seeing the Fed cut rates, there's opportunities in Nigeria, obviously. The only issue right now is just that exchange rate instability, where if I bring in my money now, when I want to take out my money, what's Naira going to be? Is that uncertainty that is really driving foreign investors? That's why I think it's not a real concern, because I feel the Naira can still stabilize, especially with the factors in play right now, with the bank with still finally, other things. So I don't think we're in a crisis, and I don't think we're in a crisis. Not that there's no problem.
Okay, then now, let's now look at the capacity of the domestic investors. Now, the NGX reported as of September 2024 that total transactions at the local bourse increased significantly by 29.90%. So, is that a plus for the market, seeing that we're seeing local players taking up the vacant spots left by foreign investors? And would you say that they would have that capacity to dominate the space?
Yes, I'll say it's a plus, because even from the beginning of the year, we've seen local investors dominate the market, especially retail investors. We've seen a lot of retail investors coming into the market newly this year. In terms, it's a plus for the Naira, for the exchange, sorry, but domestic investors is not sustainable enough to. We also need foreign participation. But for now, I don't think we're in any sort of crisis at all. The Nigerian exchange is being one of the best places I've ever been. If you look at the numbers, the Nigerian exchange has actually been one of the best places I've ever been.
Okay, well, let's still take a further look at how the Naira is impacting this issue around the Nigerian bourse. Now, the Naira closed trading on the Nigerian Autonomous Foreign Exchange Market at about 1,652 Naira to a dollar as of Friday at its last meeting. Today, we're already reading over 1,700. Now, the MPC of the CBN pegged the benchmark interest rate at 27.25%. Should it have hiked the rates in the first place to curb inflation, seeing how it is affecting the various sectors of the economy?
Well, yes. If we want to look at it, yes, because when we're seeing declines in inflation numbers, it was not a true reality of what was going on. Because if you look at core inflation was really still elevated. So when the numbers came out in the last 2 months, that was seeing the inflation increase, it was not a surprise, because investors already knew, market players already knew inflation would rise because of the effect of store prices. Because of the effects of store prices, so I don't think it's an issue.
Are you sure? Because, of course, before this administration came into play and, the Nigerian government was able to put together its economic team, we saw a gradual ascendancy in the inflationary figure. Now, inflation has hit 33.88% as of October. There are already projections that the Apex Bank would hike rates, but with, businesses reeling from the impacts and the discouraging shareholders, shouldn't the rates at this time probably be maintained or dropped, probably at the next MPC meeting? If you say, we are not in a crisis, we see the figures rising, businesses are reeling from the impacts, households are reeling from the impacts, everybody's actually complaining of the aftermath of the policies of government, both on the fiscal and on the monetary side. So would you expect the MPC, probably when they'll be sitting next, to maybe maintain the rates, the interest rates, or probably drop it?
For now, it might be a bit hard to say, but I still expect the MPC to at least have one more rate hike. Because if we look at the problem of the MPC, of the inflation, is not necessarily on the monetary side. So the CBN has done a lot to actually help curb this inflation in terms of the rate hikes. For businesses will always survive. Obviously, it's a hard environment for everybody, but my concern will most likely be households. It has been very strenuous for households right now. And if you just look at going to the market right now, price of everything has more than doubled from last year to now. That's where my major concern is. But necessarily for businesses, I don't think, because I think businesses will find a way to survive. If you look at the financial performance we're seeing from even the Nigerian Exchange, companies on Nigerian Exchange, apart from consumer goods, other sectors are really thriving, like insurance, banking sectors. So for business, I don't think it's a major concern. But the concern, I think, is really for households. Households are really suffering right now.
Okay, but then, Muhammad, you agree with me that, if people are not able to go to the market to purchase, commodities or products, and purchasing power drops, and these businesses are not able to borrow at a relatively reduced interest rates, borrowing costs are high, and the environment is not too conducive, and we see other multinationals leaving, the Nigerian markets. I don't know how well you feel businesses will survive, how they'll make profits, and how they'll be able to run the operations. But then, Muhammadu, maybe we just leave the conversation at that and hope that respite will come to businesses and, of course, the Nigerian bourse. And investors would find it interesting to want to continue to plug in their money for, economic growth, so to speak. Muhammadu Saidu, Senior Research Analyst at TrustBanc Capital Management Limited. Thank you so much for sharing your thoughts with us.
Thank you for having me.